美国联准会在下个礼拜即将公布最新的利率决策。不过，在近期通膨跟经济数据以及联准会官员的态度，让市场对于利率的走向格外雾里看花。这回我们特别为您邀请到旗下掌管超过2兆台币资金的富兰克林收益投资团队投资长 Edward Perks 来到现场，要畅谈利率问题。请看今天的关键对话。关键时刻掌握关键对话。大家好，我是志杰。你有感受到物价变贵了吗？为了要对抗通膨这只怪兽，美国联准会的升息步伐到现在似乎还没有停下来。而在高通膨以及可能经济下滑的风险之下，投资人到底该如何持盈保泰？针对这些问题，我们今天为您邀请到的是富兰克林收益投资团队投资长 Edward Perks 来到我们现场。Hello, Edward. Nice to meet you.
It's great to be with you. Hello, everyone.
Interest rate rose rapidly in the United States last year, and lately, Fed officials even revealed that more hikes are needed. From your perspective, what's driving Fed's policy, and what is your view on their path going forward?
We do think there is some more to come, and what's really driving it is really a number of things. One, although inflation has started to come down, so that's the disinflationary trend that you hear the Fed talk about, it is showing signs of being somewhat sticky in certain areas of the economy. And that's given the Fed some more concern that there's still some more work to do. In particular, the services part of the economy. And that really ties in to the next thing that's really driving it, which is the labor market in the US. So there's still just tremendous demand for labor, existing jobs, job openings. That far exceeds the supply of labor. So we've continued to see that tightness. And we've heard Fed officials talk about it quite regularly, that they really want to see some softening in the labor market. And that in turn would convince them that maybe inflation's not going to come back, right? It's really a two-part job here for the Fed. It's one, bring down inflation, but then ensure that the inflation doesn't return. Now, the Fed has slowed their pace of interest rate hikes, right? The last one was 25 basis points. We do think we'll get another 25 basis points later this month. And at this point, we really think there's likely 3 more. This is a period where we think the Fed can raise rates and then likely hold them quite possibly for the rest of the year.
And how do you think these policies will affect the trajectory of the market?
As we go forward, we think fixed income markets are going to be much less vulnerable to further interest rate hikes. The reality is we are closer to the end of the rate hike cycle. So we think that's potentially pretty positive for fixed income. On the equity side, we're actually a bit more concerned about the trajectory of earnings.
So the economy is quite uncertain, but from investment perspective, do you see 2023 might be a better year than 2022? And which asset classes do you see as particularly promising?
Yeah, now certainly from an overall standpoint, we are much more positive about 2023 than we were 2022. I think we though have to really look at it in different markets context. So if the majority of interest rate hikes and the increase in yields overall in fixed income has already occurred, that has also led to a steep downdraft in bond prices. So today, that backdrop as a fixed income investor is quite attractive. You've got much better yield, much lower interest rate risk, and you have the possibility for some appreciation potential as those bonds get closer to their maturity. So we're very constructive on that part of the market. On the equity side, while we like to talk about, as a group, we like to talk about the markets overall, we think it's a really important time to actually kind of pull back the top layer and think about different sectors, right? Because last year, even though the markets were down, several stocks, things like consumer staples and healthcare pharmaceuticals and utilities, performed quite well in a bad market. That really was an opportunity, we think, maybe to take some profits in those sectors and do some digging in the areas that had the more difficult time in the market. And that's something we've been doing.
You still see a lot of opportunities in some sectors, but do mass layoffs and lower than expected earnings make you apprehensive?
Yes, and that's something that we are starting to really see now. Companies just finished reporting their fourth quarter earnings from last year. And when you look at those earnings on a broad basis, they do show, I think, two important things. One, earnings decelerated. Earnings actually declined on a sequential basis. We also have some pretty tough comparisons on a year-over-year basis because the beginning of 2022 was actually quite strong for companies' earnings. So that concerns us. We also saw for the third quarter a continued decline in operating margins. And that's something that companies, after they start to really experience it, they start to react and try to bring down their cost base. And one of the primary ways that companies can reduce costs is unfortunately through layoffs. So I think we're really going to have to watch that very closely here in the next several quarters, and that likely poses the biggest risk to equities.
Then how can investors react to this?
Well, once again, it's by kind of focusing on certain sectors and being a little bit more flexible in how you approach investing. It's certainly a core part of our strategies, where we have a very broad opportunity set.
Talking about strategy, your income strategy has a long track record. And can you tell us how it has performed and why is it valuable for investors?
Yes, it does have a long track record, actually all the way back to 1948. I have not been the manager of that entire time.
70 years?
Yes, almost 75 years this summer. So I've been the manager of the strategy since 2002. And it has gotten quite a reception in the U.S. We have a little over 85 billion U.S. under management in total in our income strategies. And it's really that our core objective for our investors is attractive, consistent income. That's our first purpose. But then we also approach the markets certainly still wanting some capital appreciation over time. And then more importantly, as we've seen in these kind of markets, how do we actively manage the risks that we think investors are exposed to? And this is a period that we've seen more significant shifts in how we were allocated. If we were to go back just 3 years, and the world was very different 3 years ago, we actually had a pretty balanced position in our strategies between equities at roughly 50%, and that's common stocks and convertible preferreds and equity-linked notes. That was 50%, and fixed income was also about 50%. But then as we saw interest rates decline so severely, fixed income became quite unattractive, and we thought had a lot of interest rate risk in it. In that environment, we actually swung our portfolios and we were almost 75% in equities, common stocks, preferreds, convertibles, and just 25% in fixed income securities. As interest rates have shifted, like we've discussed, and now we're at much higher yields, we actually think that's a tremendous opportunity. So we've used the flexibility in our income strategies, and today actually hold nearly 60% in fixed income securities. So quite a shift in just a short period of time. Now, while we've brought equities down to just 40% of the portfolio, we are trying to be mindful of those areas that have underperformed. Where are some opportunities? And that's where we've seen some shifting away from certain sectors that have performed well, really looking at the opportunities as we go forward.
In an environment of inflation and potential economic downturn, how do you recommend investors to manage their portfolios and riding out volatility?
Are somewhat hopeful that we might get through this period, not with necessarily a recession, maybe a mild recession, but right now, the backdrop of the economy, particularly the job market, is quite strong. So that's really leading us to think a severe contraction in the economy, a very difficult recession, is a lot lower probability. That said, we still think these market challenges are pretty substantial, and having an approach that lets you really pivot to where the opportunity is something that's a key element to navigating this uncertainty.
Aside from inflation and possible economic downturn, are there any potential risks that you see that the audience should pay attention to?
There are other risks, and last year with the war between Russia and Ukraine, that was a big incremental risk, geopolitical risk that investors really couldn't necessarily predict or prepare for. So those are certainly risks that we have to be mindful of in the world today. And then with central banks taking this aggressive a stance in the markets, policy risk is certainly an elevated concern of ours right now.
Thank you, Edward.
经理人认为，目前持续下滑的企业获利是市场最大隐忧。不过，他认为2023年有机会可以进入升息尾声，也就是说，2023年的市场表现可望比2022年更加乐观。不过，投资人在投资的时候，千万要注意分散风险。我是志杰，关键对话，我们下次见。